Equities tend to rally post-election, according to research from Oppenheimer. Even with recent selling in equities causing stocks to end October lower, our next guest still sees room to run. Joining us now is Wald. He is the head of technical analysis at Oppenheimer. Ari, great to have you here with us this morning. What are the technicals telling you about the setup, not just for the rest of November, but perhaps the likelihood? Is it too early to talk about a Santa Claus rally? I don't know. We just want some joy and some cheer to talk about.
I think the setup is there to see that strength into year end. I would say the market is behaving in a manner consistent with an uptrend that should continue and extend into 2025. This is all the seasonal roadmap is consistent with history. This 1% drop in October, consistent with the typical pre-election year moderation. And typically then, as we get that uncertain event out of the way, the November, December tends to be a much stronger time of the year. And I would say, just given the broadness of the move into the recent highs, you have the cap-weighted S&P coming off new cycle highs, equal-weighted S&P, mid-cap Russell, just the broadness of the move would suggest that this is an uptrend that can continue.
Yeah, Ari, talk to us a little bit more about the fact that why you are convinced, just given the broad-based breadth, what that signals. In terms of the top play, you singled out KCE as one of those top plays in order to capture some of that momentum to the upside.
Yeah, typically rallies with more stocks participating are the rallies that continue. As a warning of a market top, you're going to be looking for strength in the cap-weighted indexes, masking internal breakdowns and rollovers in select pockets of the market. We're not seeing that. And on top of that, I would argue it's generally the right leadership. There's been some slight rollovers in beta. We've argued it's really not a uniform move because you still have sectors like in financials and industrials outperforming more defensive areas like big pharma and consumer staples. And financials in particular, they rank very high in our momentum work. We are momentum investors that overlay technical analysis on top of our process. And for exposure to momentum, look no farther than financials. And the pocket in particular that stands out to us is capital markets. And there was an ETF that we highlighted in our latest report. It's the SPDR, ticker KCE. And why we highlighted it is because it's equally weighted. So it's not just being driven by Goldman Sachs and Morgan Stanley. You're capturing that through that industry throughout capitalizations is moving from the lower left to the upper right. And that is the type of strength that I think leadership that I think should be owned. It should be bought on pullbacks, and I think it should continue to be a driver of this upcycle looking ahead.
When you think about the upcycle and the concentration of names that have really outperformed and carried the rest of the market with them as well, have we ever seen anything like that in the past? And how does that perhaps reconfigure some of the technical analysis that you're doing as well?
We have seen it in the past. And of course, it's important to differentiate between absolute participation and relative leadership. When large caps are going to outperform, there's going to be, just mathematically speaking, there's going to be fewer stocks leading the way. And we've seen that before. We saw it throughout the 80s and 90s, actually, from 82 into 1990, and then again through the 94 into 2000, it was large cap leadership, but small caps were still participating. And that's going to be critical for us. And I think I want it to continue. Looking at the Russell 2000, it's upholding its 200-day average. It's still grinding higher. It hasn't been as strong as large caps. It hasn't led. I'm okay with that as long as you still get that broad participation. I think we're in a large cap growth-led secular bull. And I think, so with that in mind, I think it would be consistent to see perhaps those large cap names continue to lead the way over a longer term basis.